Yes, Ernest, you can go ahead.
Yes, ma'am. I just needed to find out like this year where the year ends on the 29th. Do you take the 29th as the last day or what's happening with that one day extra? Just
Great
one.
question.
And the other one is this one, but I think that the other one I can ask at a later stage. What more like me who doesn't know anything about accounting, I just know if you say come and do me construct this, I can build, I can renovate, I can do whatever, but I don't know about these books. And then the accountant gives me that thing. How will I be knowing? But I think from the lesson, I learned something as we go on. Like you said, we cannot master this in a month. I've dearly appreciate to have this lesson, and I wish to have it like now and then. So the problem here lies with some other accountants, they'll submit to SARS, they'll submit, they give you this thing, you see then there's money coming in, and you really don't understand what's happening. And you say, no, the accountant is doing good, I'm getting at least something from SARS or from so, only to find that you don't understand a thing.
Yeah.
How then do you resolve that?
All right. Thanks, Ernest. The first question with regards to this year being the 29th of February, I didn't know that, by the way. But yes, then your financial year end will be on the 29th of February. Next year, when it's the 28th, they need to go back to the 28th. So it will adjust according to February because February is, yeah, changes like that. Now, in terms of not knowing whether the accountant is submitting things correctly or not, I'd say rewatch this video again and just go over what I had said you must look out for when you are presented with management or with financial statements, right? And then also the accountant now, when submitting tax returns to SARS, you must ask that, can we first have a review of whatever it is that you're submitting so that I'm comfortable with whatever is being submitted under my company? That is a request you can have. No doubt about it, because ultimately, whatever is being submitted on your behalf is still your responsibility. So you have every right to say, hang on, before you submit anything for me, let me see what it is that you're submitting so that I can double check that everything is in line with what I'm anticipating. So you can ask that your accountant does not submit anything until you guys have reviewed it. All right. Yes, Jomo?
Oh, hi, Pamela.
Yes, Jomo. How are you?
I'm good, good. I wanted to find out, man, the management account and the financial statement, do they serve the same purpose, or is it because the financial statement has to be signed off by the members?
Okay. So thanks for that question. Financial statements will look at the financial performance for the company over 12 months. So let's say your company's financial year end is from January till December. So the financial statements will look at how the company performed over the 12 months. However, the management accounts look at the performance in each month. So in January, what were the sales? What are the expenses? In February, what are the expenses? Was the income? Did we spend more money in marketing and less from prior months? So management accounts are more on a monthly basis and financials are more on an annual basis. So management accounts go show each month for 12 months and then financials only show one period that covers the whole 12 months. Right. I hope that has answered that question. So management accounts are very important for internal review because as a business owner, you don't want to wait until the end of the year to see how the company performed. You want to be checking every single month. What sales did I make this month? How much money did I spend on entertainment? How much money did I spend on employee costs? Every month, you want to be making that assessment so that in the upcoming months, you can make any changes that are necessary. So for example, if your sales, you had targeted that your sales on a monthly basis, 200,000. If you are looking at your management accounts every month, you can then see, am I hitting my targets every month, right? Cool. Jomo, did that answer your question?
Yes. No, I'm fine now.
Okay,
Fine.
perfect.
Thank you.
Any other questions? Yes, Collins. Go ahead.
Um, hi, Pamela. I wanted to find out,
Yes.
um, now that you're talking about this, being able to check month to month, how the business is doing. I was curious to find out how would we then know how much do we owe to SARS and how would we be able to put it aside?
Okay. So it's very simple, right? You take your income, which is your sales or your revenue, you'd minus your expenses, right? So every month, whatever profit you make, you can put aside 27%. Every month, 27, because ultimately at the end of the year, they're just gonna add up all those incomes, add up all those expenses, take the profits, and then calculate the 27%. So you can just do that monthly. Okay. Did that answer your
Right.
question, Collins?
Yes, thanks.
Perfect. Any other questions? Jomo, your hand is up. I'm not sure if that's an old hand. Okay, that is
Hi, Pamela. Apologies. I'm trying to raise my hand. I can't find the
no stress, dear.
the
No
emoji
stress.
for that. I apologize for just chipping in. Morning, all colleagues. I just wanted to ask you, you mentioned something about, I'm not sure if I heard you correctly, and perhaps it's a request for you to repeat. You said something towards the end that your financial statements need to match what is in the bank account. Can you just repeat that last part for me, please?
No stress at all. I'm just gonna share my screen. Okay. Oops, sorry. Report. Okay. So how you can check, there's two ways you can check the accuracy of your financial statements, right? The first one is that your balance sheet balances. So the balance sheet, which is now known as a statement of comprehensive income, is the one that's made up of your assets, your liabilities, and your equity. Equity is what's left in the business after you've paid your liabilities. So meaning that you first take your assets, take your total assets minus your total liabilities. The answer should equal your total equity. You just do that quick calculation. If these two don't agree, take it back to your accountant, something is not right. The second thing you can look at is under the cash flow statement. At the bottom of the cash flow statement, there is this net cash at the beginning of the year. So if your financial year end is from the 1st of January, then you go to your bank statement from the bank and you look at the bank balance on the 1st of January. The bank balance per the bank statement should amount to this 200,000 in our example. Then if it does not amount to that, take your financials back to your accountant, something is not tying up. The other thing is the net cash in blue now. The net cash looks at the bank balance as at the end of your financial year. So if your financial year end is December, then you go to your bank statement as at December, 31st of December or 30th of December, depending. 31st of December, you look at your bank balance. Your bank balance as per the bank must agree to this 330,000. If it doesn't, take back your financials to the state, to your accountant, something doesn't add up. Okay. Well, I hope that has answered your question.
You have. Thank you so much. Much
You're welcome,
appreciated.
dear. Right. Okay. Okay, there were a number of questions that were asked from you guys. Yes, Cosmos?
Hi, how are you?
I'm great,
I hope
thanks.
you
And how are
can
you?
hear me. I'm very well, thank you. And I appreciate this very good meeting that you arranged there, and my pleasure that I'm part of this group as well. I want to ask something very basic here. As a startup business, new, all right, I don't have any of these documents in front of me, right? All I have is probably the finance to buy whatever I needed to buy to start the business. But on the admin side, which is what you're explaining today, the financials and all that, I don't have any of these documentation or templates. What's your advice? Where do I start from? Or do you have templates, or do I need to engage with the financials guys? What's your advice for a startup entity?
My
Small
advice,
business.
my advice is very simple. You need to engage with an accountant, because the last thing you want to do is to try to do this yourself, because the errors that are going to happen if you try to do what an accountant does. That's like me trying to do what a doctor does. I'd rather just go to the doctor and pay what is required, because if I try to do what they do, where they went to medical school and then they went into practice, that took years. So obviously, if I'm now trying to operate on myself, I will make mistakes because I have not put in the time that they have put in. So my advice is reach out to an accountant. Make sure that when engaging with an accountant, you also start using an accounting system. So an accounting system is a system that you use to create your invoices, to send your suppliers invoices as well. That can also be linked to the bank. So if you also have an accounting system, when you go to the accountant, that will make life easier. But that's something that the accountant will also explain. Please don't use Excel or Word documents or PDF document, however way you use it, don't. There's very cheap accounting systems that will ensure that the financial record keeping of your business is done correctly. Okay, guys, unfortunately, we've run out of time. I just want to touch on a couple of things before you all disappear, because your time is valuable. All right. Okay. The first thing is we have an ebook that we will gladly share with everybody on this group. Feel free to just send us a WhatsApp. There's our number. I'll show the number shortly. And then we are also offering free consultation. So if you've got any questions, free 30-minute consultation with me, whereby I'm focusing on just you to find out what your issues are and how we can be able to assist. Again, we will reach out to the people that attended this webinar to find out if they would like a free consultation. So please do take it up. Right, we have our webinar happening on the 1st of February 2024 from 9 till 9:30. So we are hosting webinars every 2 weeks. We will communicate with you what the topic will be on for the next webinar, but we've gotten some very good questions when we're preparing for this webinar. Maybe some of it were about cash flow management, how much I should pay myself as a director, how do I account for the costs. All those are topics that we'll be addressing at the webinars that we'll be hosting. The next one is on the 1st of February 2024. The other thing that I just want to put out to you is, what would you like me to discuss at these webinars, right? Please share with me so that I know that I'm addressing things and topics that you are interested in finding out about. So you can send a message on the chat to say what it is that you'd like us to discuss. Raise your hand, let me know what it is that you'd like us to focus on, and it can be one of the topics that we focus on at one of the webinars. Feel free to contact us. These are details. We're available on WhatsApp, on calls, on the number 073-490-1703. You can also check us out at our website, which is www.nzumoconsulting.co.za. You can also send an email to our sales team, which is sales@nzumoconsulting.co.za. We are physically based in Johannesburg, Gauteng. However, we service all clients within South Africa. All right. Thank you so much, ladies and gentlemen, for joining me at this webinar. I really do appreciate your time, and I do treasure it. So I will not go any longer than necessary. All right. Take care, guys. I will stay on for people that might have questions afterwards who's still available. That's fine, but the webinar has officially ended.
Are the questioners through the phone or on this system again?
Sorry, Cosmos, can you say that again?
It's Ernest. I just needed to find out with regard to questions and the like, should we wait for one-on-one session or
Yes.
can we ask,
Yes.
should we call you?
Yes. So I've made a note, Ernest. Zoops from the team will reach out to you to find out if there's any other specific questions that you'd like us to address.
Okay, thanks a million. And then the 1 o'clock session, one-on-one?
1 o'clock.
Yes, I've scheduled the session now today at 1 o'clock.
Yes, that's
Remember
still
when?
happening. The consultation.
Okay, thank you, ma'am. Consultation, thank you. Bye.
Sure, thanks. Bye. Yes, KB. You can unmute KB.
Morning. The questions on the chat, are you gonna answer them now, or are you gonna answer them to the individual directly?
So I can answer them. I remember yours was regards to what is a good cash flow management strategy you can recommend. The second one is please recommend a sustainable gearing ratio for an SME. Those were your questions, right? So, okay, cool. The first one, what is a good cash flow management strategy? That is more of a cash flow management webinar worth because that is quite a loaded question of how does a business owner better manage their cash, right? So what I'm going to do is, because there's not enough time to answer that question, is the next webinar will be focused on cash flow management strategies for small businesses. So I will send out communication with regards to that, because that was not the first time. You see, another person asked, how can I manage my finances better and more easily? That's also cash flow. So yeah, I will definitely focus the next webinar on cash flow management. And then with regards to sustainable gearing ratio for an SME. So gearing is with regards to the how much debt versus capital investment within a business. So what that means is, in a company, who is basically paying the bills, right? Is the company financed by debt, meaning that by loans or banked by loans, so that's debt, or is it financed by its shareholders, meaning that capital investment? So the gearing is with regards to the percentage. Is it 50-50? Is it financed 50% by debt or 50% by shareholders? Or 30-70, whatever the case may be. So that's what gearing is, just a brief background to people who just want an understanding. So how you can determine which method should you be? Should you be more invested by debt or invested by shareholders investing into the company? That's an assessment that needs to be done on a business level, right? Because each business has different risks associated with it. Each business has different risk appetite, right? So the shareholders can say, I want no debt in my company. Therefore, there will be no debt for that company. Whereas, so it will be financed 100% by equity, meaning that by the investment of the shareholders. Or the company can say, I want 50% of my company to be financed by debt. Therefore, 50% will be from loans. That's how the company will be financed. So the assessment has to be done on the risk appetite for the shareholders that own the company. Another thing that you can look at is the industry ratio level, gearing level. In your industry, what are other companies doing? Are they financing via debt at a larger portion, or is it from investors financing the company? So that is an assessment that needs to be done at a company level to make a proper assessment. Okay. Any other burning questions that I can quickly address? You're welcome. Right. All right. If there's no other questions, I'm just quickly gonna check in the chats if there's nothing that came out. Okay, I don't hear anything. Okay, come on. Okay. Mhm. Okay, so there's a question in the chats that's asked, what is the difference between cost of sales and overheads? That's a great question. I always get that a lot. Okay, so cost of sales, I'm going to use an example. I have a highlighter. So let's say your company manufactures and sells highlighters, right? So cost of sales are the costs that the company would have incurred to make this highlighter. So it is this, the thing that you use to color in. So this lead, this covering, the ink. So those are your cost of sales, as well as the labor. So meaning that people sitting down and putting all this together, these are your direct cost. So that's what would make up your cost of sales. Overheads are expenses that a company have to incur in order to perform correctly. So meaning that this company that's manufacturing these highlighters is renting. So the rent expense that the company has to incur cannot directly be linked to making this, but it's a necessary expense that the company has to incur in order to function. Let's take the receptionist. The receptionist's salary cannot necessarily be linked to this, right? Because they are not the laborers who are putting the pen together. However, somebody has to answer the calls when they come into the business, direct emails, etc. So those are overheads. Stationery, and this is stationery within the company, like the papers. So that's where the difference is. Cost of sales are costs that are directly linked to the sale of the good or service that you offer. Overheads are other expenses that the company incurs in order to function, in order to be able to deliver that good or service. Hope that answers the question. What is the difference between the bookkeeping sheet and the management accounts sheet? I'm not sure if I understand that question. KB, maybe you can just jump in and explain that one. May you please share with us the management account spreadsheet? KB, do you maybe want to jump in and just ask the second one? I'm not understanding it.
Yeah, and now that you told us not to use sheets, I feel a
Yes,
bit ashamed.
don't, please don't. Don't.
All right, so I think rather there's no such thing as cheap, a cost-effective or less costly management account system, because I've been using my spreadsheet for the last 10 years. So you've told me once, and now this is the second time you are saying I shouldn't use my spreadsheet.
Yeah, they are, because there's a lot of admin that's involved there. There's keeping it up to date. There's ensuring that it is accurate. There's the risk of human error, you know. Whereas the accounting systems eliminate a lot of that which I mentioned, the level of admin that's involved, the need to keep it up to date, etc. So there are some that come in at a price of about 300 per month. There are some that come in at like 600. So I think just do the necessary research to see which one is more cost effective for you. But please move on to the accounting systems and just get training on them, on how to use them. And then you'll find they'll make your life so much easier. I promise you. You will thank me. You'll come back and say, Pam, I should have listened the first time. All right, Ernest. Ernest, you have your hand up?
My hand was up. Can you hear me?
Yes, I can.
Yes, I'm saying I'm one of those who've been using the accounting, I mean the spreadsheet. At one stage I tried Sage, but I could not afford because of my business, so I rattled a little bit. However, I just needed to find out, do you mind maybe to share those that we can afford? Like you've been saying, like he says, it's not cheap, but it's reasonable.
Yeah.
That's one. And number two, I've just sent the question saying, is the 27% that you say we need to put aside, is that inclusive of VAT, or is VAT still to be put on to that 27%? Because of one might say, oh, I've put in 27% aside, and not knowing is VAT inclusive or excluded on that.
Okay, all right, thank you. All right, so the first thing is accounting systems. There's lots, all right? I'm not sponsoring any, I'm not sponsored by any, so I'm like, do I have to say? But anyway, the few that I recommend is, the first one that I recommend is Xero, the accounting system called Xero. It is a little bit more expensive. It comes in around 600, 650 per month. What I like about the Xero system is that it is very user-friendly. So how you spell it is Xero, right? You can do some research on that. Xero. The second one is QuickBooks. QuickBooks is also quite good, quite user-friendly. Then Sage, possibly. But yeah, in terms of pricing, QuickBooks I think is the cheapest. But in terms of being user-friendly from the perspective of a business owner, I'd say Xero. But do the research and find which one you preferring. And then in terms of the VAT amount, I mean, the income tax amount is always the amount excluding VAT. So all of these reports that I've shared with you now, these are all amounts excluding VAT. It's always amount excluding VAT, because remember, VAT doesn't belong to you. So it goes nowhere near your reporting to indicate how the company performed, because VAT, you're just holding it on behalf of SARS and then paying it over. So the 27% would be so in my example here, it is the profit before tax. You then just calculate the tax at 27% times 0.27. So that's how much tax you have to put aside. However, if your company qualifies as a small business corporation, you could pay no tax at all, even though you made a profit. But that's another recording. Ernest, you just go to our YouTube channel. I do have a recording for that one. I'll just share with everybody, actually. If you go to our YouTube channel, you'll find the recording that explains the thing about the small business corporation. So it's how your company can pay almost little to no taxes, even though you made a profit. So on the YouTube channel, here. Now I'm going to see it from this perspective. Anyway, if you go to our YouTube channel, you find all our recordings, and then here, where's the bed? Here, how to pay. So choose this one, the one that says part 1 of 5, how to pay less income tax. So watch that recording. It explains the whole concept about paying tax at 27% and how you can pay even less tax than that. Okay.